Welcome to Crypto Rosetta. My name is Savage. Today we're going to be having a look at XRP. This is going to be a higher time frame video. We will also be doing a lower time frame video, which can be found up above here. So check that out if that is more what you're interested in. So let's get into the charts and see what's going on. Okay, so on Bitstamp here, we have price history from August 2013. Now we need to be aware that we still don't have all the data here, so we need to just be mindful of that fact. Now, the way that I'm looking at this primarily is that we have a higher time frame 5-wave structure. Now, the thing is, this fourth wave, if this is the case, would actually be looking to drag out quite a bit here. So we also have the potential here that we do have this as a completed move to the upside here, and then we are also looking for a B wave. So we're going to go over the 5-wave option first. Now, even though this fourth wave is quite large in comparison to this wave 2, it is still within the allowed parameters here. We are still just coming up to 3 times as large as this wave 2. So technically speaking, this is still allowed within Elliott-wave. So I am still primarily treating this as a fourth wave. Now, what I'm looking for here is that we could potentially still see a push up towards this 28.22 to this 7.51. So this would be a typical fifth wave area for us to target out. Now, a typical zone we find for support here would actually be between this 0.63502 to this 0.9991. Now, this lower range here, this 50%, typically speaking, fourth waves will not break this 50% area, but sometimes we can see them come a little bit lower. As long as they close back within it and then look to reverse, it is generally allowed. So the counts that I'm going to go over today kind of work both for that idea of that B wave and the fourth wave. So what I'm looking for primarily is that we actually have a bigger W and X, and we're actually looking for this Y wave to the downside. Now, typical Y wave target we look for would be this 1-to-1 of the wave W, which would actually be lower down here at this 0.6760. Now, we do have some other areas here that we could actually look to potentially fall short. The 0.618, which would be the minimum requirement, is actually here at this 24499, and then we also have this 786 at this 13.9, and this 11 cent 05 is the 854. Now this one would be quite interesting because it would actually be looking to bring us back into this low. Now if we are looking at this move here, what we have is the potential that this move as an A, B, and a C could actually look to push us down towards this 1-to-1, which would be close to being in line with this 786 that we have here. So I'm going to turn that count on here now, and what we'd be looking at is effectively this move in this way, where we are treating this move to the downside here as an A wave. Now this would be looking at this as A, B, 1, 2, 3, 4, 5. Now there is another way of counting this, which we're going to go over. And the idea here would be that we actually complete into this higher low over here, and we've had a truncation within this fifth wave. If that's the case, this changes how our count is to the upside here, but effectively the target box is pretty much the same. So what we'd be looking for as a potential rejection area here would be between this $1.30 and this 59-cent region. Now this would be the 0.382. So this would be a lower area of a rejection, but typically speaking, we'll see price actually come up higher between this 50% at the 75-cent region to this $1.30 area. So this would be our typical B wave that we're looking for. If we had to see a move up into the 0.618, which I think is quite an interesting area just based on some previous structure that we have over here, what I would be looking for then is that potential to actually see this C wave play out to the downside. Now, once again, we have the 0.618 here, which would be the minimum requirement we'd want to see for a C wave. This would actually look to take the A wave low. So I would be keeping an eye on this if we do move down here and we get a truncation in the C wave. Alternatively, we could see this price move more down towards this 1-to-1, and then we do have some other levels here which we could see price extend out to. So if we had to extend out to this 1618, we would actually be looking to come down to this 0.4096. Now the important thing here is once we start to get some structure to the downside, we'd be able to try and pinpoint this a little bit better. Until that time, we need to just have these levels and see exactly where we move to the upside. These levels will also be affected depending on how high we come. If we had to only move up to this 382, these levels would be lower down. The 618 would actually be at that 17-cent region. So it depends exactly where we move up to here. So we're going to go over some of the B wave ideas here as well in a second. Looking at this B wave here within this way, what we'd actually be looking at is a couple of options. So we'd either just have this as a corrective structure where we have this wave as an A wave to the upside. We're looking at this as a B wave to the downside, And effectively what we would then be looking for is a C wave to the upside here. Now it is possible that we could actually see this just be a B, and this is completed already, and then we see another ABC. So basically this would be instead a W and X and looking for a Y wave to the upside here. Now if that's the case, what we'd actually be looking for is support to hold at this blue box area. So this blue box area would be this 47.34 to this 42.75. Now what we'd be looking for here would effectively be price to come back down into this level, find support and get an additional push to the upside. The target area for that, if that is the case and we actually have a low in place here, we'd still be looking around this 80 cents towards this 1-to-1. Now we obviously do have some big levels above us towards this area of the 68 cents. And then, you know, this whole range here could offer us resistance. So we need to just be aware that even if we do move up in this corrective move, we could still face that rejection for that B wave and then have that continuation to the downside. Now, another way that we could look at it is that we could argue that this move is actually completed, because though we haven't come down to this 0.618, we do have a 3-wave move here. So now if this Y wave is actually really short here, what we could actually see is price start to move away from this area. So I'm just being mindful that because of the current structure we have here, we could actually have a series of 1s and 2s. Now the key thing is here, we'd want to see a nice strong impulsive move to the upside towards this 93 cent to actually confirm this. Breaking down below this 41 cent region would actually invalidate this count. So we do have the potential of this being a 1-2-1-2, but we need to see price action actually follow through if this is the case. And what we'd effectively be looking to do is actually start breaking back above these highs here. And what I'd want to see ideally would be breaking back above some of these key levels. This 91 cent region would be the first, which would actually give us that 3rd wave target. If we did get a 5-wave move in this way, this could actually give us this additional 4th and a 5th, which could actually look to push us up towards this $1.37 to this $1.16. So now if we did get a 5-wave move in this area where we just got a straight move to the upside in a 5-wave structure like this, we'd have to be careful, because this could technically mean that, you know, if this is actually completed here and we get this as 1, 2, 3, 4, 5 to the upside, that could actually just tie into the idea that this whole move as a 5th wave is actually truncating. But it is also possible that this could then become wave 1, we get 2, 3, 4 and 5, and then we'd actually get a much bigger push to the upside. So we'll have to monitor that structure as it comes in. So another way we can look at the structure here is rather in this way, where we treat this as an A, this is a triangle, and this as a C wave here. So A for A wave. Another way that we could look at this move to the downside is that we have an A wave here, a B wave triangle, and actually have a C wave to the downside. Now, if this is the case, what we'd actually have here is a 5-wave structure down here, and we'd be looking for that potential that we could see this B wave come up. Now, it would be important to see this B wave actually push back up to this 90 cent range. Until we actually take these highs here, we need to be cautious, because if we did get a move directly to the downside here, we could always have that potential where we form 5-wave structure. It's not my primary expectation, but if we had to see a direct drop down here to this 8 cent 7, what we would then be looking for is, you know, this as an impulse. Then obviously if we have a triangle here in this way, it wouldn't be able to be counted in that way, but we need to just be careful, because there is potential to form impulses to the downside if price actually breaks down too deep. So we need to just keep an eye on it. Now if we're looking at price in this way, where we treat this as A, B and C into this low rather, now we have a couple of different possibilities of how we can look at this structure. So within this structure, we could argue something like this, where we could say that we're having a diagonal pattern here, where if I come in a bit closer, what we'd be looking for is this potentially as 1, 2, 3, 4. And what we'd want to see here is a 3-wave move for this 5th wave. So we'd want to see something along these lines, A, B, and C. Now, I've used this area here, which would be the 0.618 to the 0.65 of the wave 3, looking for a potential target area for this 5th wave. Now, typically speaking, these 5th waves will actually look to challenge the trend line of this wave 1 to 3, and that this target of the 63.51 to the 62.16 would actually give us what we need to do that. So I'm not going to go too much into the minor counts here, but effectively what we'd be looking for is this move to complete, a 3-wave move down, and then another 3-wave move to the upside. If, however, we look at this move and we still get and we just break down directly, but we managed to maintain this zone here of this 33.85. What we could actually have is instead this could be a W, this could be an X, and then we could see a Y, or this could be A, B, and C. So same sort of idea. It's just within this one we would have that potential of this actually completing as a diagonal. Alternatively, we could argue that this A wave completes here, and we're looking for this direct breakdown to this point from here. Now, as a diagonal pattern here, this fifth wave is not allowed to cross this 80 cent region. So if we do see a push up past this 80 cent, we cannot look at this as a diagonal anymore. So we'd have to be on the lookout for that. If we did get a retracement back down here into this golden pocket, which would be this 3853 to this 3759, what we could then see is price action push to the upside in either a 5 wave move for a C wave, or a 3 wave move for a Y wave, and the target area for that would actually be this 077 region. Now that would be looking to push us back up here into that B wave area. So these are still looking for this potential of a rejection within here. So if we had to move up to that 1-to-1, it would basically bring us into around that 50%. So I'd be careful. You know, any kind of 3-wave structure to the upside here is going to be dangerous. We need to be mindful that we could still look to actually break to the downside. Now, another way that we could potentially look at this move here is we could say that this whole structure actually is a triangle. Now, I've got some different targets on here. We're going to go over the green ones first. Now, what I'd be looking for here. Now, the reason that I'm not too keen on this count is just because the subdivisions of these waves are a little bit messy. And typically speaking, within a triangle, we are only allowed to get one complex wave, and it's normally either in the C or the D wave. So because these waves are a bit more complex in the beginning of this move, we need to just be mindful that this is a lower confidence move, but we have respected this target of this green target here, which would actually be looking at this B wave here. So this would be that 0.618 of that B wave. So now because we've held that area here, what I'm looking out for is if we get a 3-wave move to the upside, what we could see is this D wave actually come into play. Now what I'd be looking for here would be that potential of that diagonal as an A wave, a B wave to the downside, and then that possibility of a C wave to the upside. Now that could actually push us up into this $1 area to this 94 cent. So this would be using, once again, the length of the C wave as a potential target area to get that 0.618. Now these don't always have to hit these. Sometimes it can only be 2 waves that will have this relationship, but what I'm looking for here is just trying to build something. So if we did see a move here into this $1 area, what we could then see is our E wave come down towards this zone of this 49.97 to this 48.35, and then effectively what we would have here is a completed triangle from further back, which would mean then that our 5th wave would actually be looking to push up from this point. Now another way that we can look at this is that potentially this C wave is not complete and is also getting complex here. Now this is why I don't really like this count. We could argue that this ABC to the downside, provided that we don't actually break down below this 11 cent range or above this $1.96, could actually be still in play, where we actually have a bigger triangle, and then effectively this trend line would move something like this, where we could see this move rather come back down into this 24.49 to this 21.99 region, and then actually look for a D wave to the upside and then that E wave. So these targets are the yellow ones here. Same sort of idea. The alternate C area would be here, and then this would be our alternate D area and our ultimate E area. So we'll have to keep an eye on this. If we just continue to stay range bound between this 196 and this 11.4, this could actually tie in with that idea of having this just as a bigger triangle, which would mean that we're just going to see some sideways choppy action going on here, and not a lot interesting, to be fair. So once again, same idea with this would be that we're looking for this as a diagonal here for an A wave, a B wave down, and then that C wave to the upside. So if I overlay this, we can see that 1-to-1 would actually only bring us up towards this zone of the 77. But if we did see a little bit of extension here within it, potentially we could see price come back up into this 1382 to this 1236, which would be bringing us back into this $1 area. So keeping an eye on that, just as an alternate possibility. Now we could also argue that this move to the downside here is actually forming rather in a W, X, Y, X and a Z. Now if this is the case, what we're looking for here is that potentially we could actually have completed into this high and we could be looking to break to the downside. So it is possible that we could still have another leg here where this is A, this is B, and then we're looking at this as a C wave to the upside for this X, or this could be W, X, and then Y. Now, if it's W, X, and Y, what we could see is the possibility that we could have this as A, B, and C, and still look to push up towards this zone of this 75.99. Now, this would be a 1-to-1 of this previous X wave that we have here. So I'm just keeping an eye on this. If we do see price be gravitated up into this area in just a 3-wave move where this becomes A, B, and C, something like this, then what we could actually have here is the possibility that within this structure, this is actually still in this X wave and we're still looking to break down. So for our current area here, what we'd actually be looking for as a target area for this Z wave, so this would be based off of this high that we have in place here at this 58.16. Now if we did see price action start to break down, what we'd be looking for would be between this 0.618 at this 25 cents to this 15 cent 15. So need to keep an eye on this. If we do see price start to fall off in another 3-wave move, these targets could actually come into play here. Now like I said, it is possible that we're still within this X wave where we have this as A, B, and C, and we're still looking to push to the upside, in which case what we could be looking for is a slightly higher target here where we're looking for this potential of pushing us up higher past this 1-to-1, because we've come up to this 1-to-1 here. Now what I would be looking for here would be the potential that we could actually see price be pushed up towards this 1236 or this 1382. So we can see this 1382 actually ties up quite nicely here. If I just change the color of this one, this orange 132 actually lines up quite nicely with that 1-to-1 that we have on the other side here. So this would be something worth keeping an eye on if we do see price continue to push to the upside here. Now another way that we could actually argue that this is playing out is that our X wave actually completed here, and what we are already is within the Z wave. Now the way that we would be looking at this would be the possibility that we actually have this as an A, a B, and a C. Now we'd be looking for this as a flat correction if this is the case. Now within this structure, what we would typically look for as a possible B wave, as an expanding flat here or a running flat, would actually be between this 70 cent 77 to this 55.82. Now the key thing here is what we'd be looking for is a 3-wave move to the upside. So it is still possible this could actually be WX, we get A, B, and C for a Y wave, in which case we could look to test some of these higher areas up here. Or alternatively, what we could have is that this move has already completed and we're going to maintain this high of this 58.48. If we maintain this 58.48, what we could see is price actually start to form a 5-wave move to the downside. If we do start to form a 5-wave move to the downside, what we would have is some targets here where we would be looking for a running flat potentially towards this 31.43, and then if it's going to be expanding, we'd be looking for this potential of actually coming back here towards this 27,152 to this 21,417. So within this would actually look to bring us down to this minimum target that we'd look for as this Z wave here. So I'll be keeping an eye on that. If we see price come down here in a 5-wave structure, that could do enough to actually complete this as a corrective move, and then we'd have to watch how the move develops to the upside. Effectively, what we'd want to see is 5-wave structure to the upside developing if we are looking for that impulse and that possibility of an additional 5th wave. If we just see 3 waves up, we need to be aware that we could actually still see continuation to the downside at a later date. So that's going to be the key thing here. If we do get this play out as this WX, YX, and a Z, and we come back down one more time here for the Z wave, what we'd want to see is effectively this move come back down, look to test out this area, and then reverse to the upside in 5 waves. We're looking at this potentially breaking down. What we'd be looking at this for is actually maintaining this high of this 5848, and then we'd be looking at this as 1, 2, 3, 4, and 5. So our target here that we currently have would be this 30 cent 57. A direct break to the downside past this point would tie in with this idea of having this bigger third wave playing out. Now, like I said, there is also the potential this could be still in a WX and a Y, where we could actually see price push up here one more time, and would be looking for this potential of coming up towards this 79, well, basically this 80 cent region. The 0.618 would also be an interesting level here, because this would be looking to bring us up into that Y wave high. So keep an eye on that if we do see price move up there. Just covering this move here again, where we have this A, B, and a C to the upside, looking for this potential that we could actually see a bigger B wave playing out here. Because of the current structure here and how choppy it is, we also can't rule out the fact that we could actually see price break these highs, but as a corrective move. And what I'd be on the lookout for is we could actually see something like this, where this becomes A, this becomes W, X, and Y for a B wave. And now if this is going to be a B wave, I've got some target areas here that I'm looking at. So if this Y wave is going to fall short, potentially we could actually look to retest some of these zones here, possibly even forming a double top here towards this $2 area. Now that would be something I'm just keeping an eye on if price does move up here. If we just see a 3-wave move up here and we actually break into this $2 range, that would satisfy the minimum requirement of this Y wave already. Now, as well as that, if this is going to become something like a bigger flat correction or an expanding flat correction, what we could actually see is price could actually be gravitated towards this $12.02 to this $3.31. So this would be quite a common area that we see a B wave and a flat correction. Now what this would mean is that we would be actually looking to target up higher up here, past this 1-to-1 of this is a WX and a Y to the upside. Now the key thing here would be what would be looking for confirmation would be a 5-wave move to the downside off the back of this. If we had a move up here and we only had a 3-wave move to the downside, this would indicate that this count is wrong. So I'm just showing you this. This is a more speculative count, but it is still something I'm just keeping an eye on. If we see 3-wave move to the upside, then we see a 5-wave move develop to the downside. What this could actually mean is we could come back down into this 12 cent 30 all the way down to the 0.16 as a expanding flat, as it could be a typical area. So this lower red zone would be the typical zone of an expanding flat. So we'd have to keep an eye on that if we do just see a 3-wave move to the upside. Okay, so I'm going to leave the video there. I hope you found it useful. If you did, please smash the like button, hit that subscribe button if you haven't already, turn on those bell notifications so you never miss a video, and leave us some feedback down below. Also in the description you'll find links to the Discord. Come check it out, it's free to join. Have a great day. We'll see you in the next one. Take care, everyone.